What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session on EURUSD, where our favourite setup keeps repeating again and again. So it occurred again this morning, and today's analysis, I recorded this as a live execution, so we'll jump to that live trade entry shortly. We can also see how the setup occurred on the 5-minute time frame initially, and then we were able to enter by refining down to the 1 minute for our execution, bagging a really nice 5-hour trade. So let's jump into the analysis now and the live execution to see how this presented itself. As always, we'll start off our initial analysis off on the 15-minute chart. And we can see at the moment Asia has actually been displacing lower. We've left a new week opening gap, so this week's opening gap up here. It's only very, very small, but this would be a draw on liquidity, so we would expect this to get filled. And also, as Asia opened up, it created liquidity just underneath the new week opening gap. Now you can see during Asia we have been displacing lower, so we've been leaving bearish fair value gaps. Consequently, this means any kind of long positions that we're looking for would kind of be counter trend here. We've built relative equal lows for Asia below us. So we put in an Asia low, and then we've obviously got a low just after the Asia session, so we've got relative equal lows here. This low is also relatively equal to this swing low that we put in the New York AM session on Friday, so we'll highlight this as a potential level. Also, as additional confluence, this does take us back into a previous weekly opening gap, so these shaded orange areas are previous week's opening gaps as well. A large wick here, which can be treated as an inefficiency or a fair value gap, so we'll keep note of 50% of that level. So ICT on wicks specifically says you can treat them as an inefficiency and pays particular attention to 50%, so consequent encroachment of the larger wicks. So that's what this is identifying here, just in case we come down, sweep any liquidity here into this extended wick. Then we can keep an eye on the consequent encroachment of that level. That's sell side liquidity, not buy side liquidity. We'll take a look as well from the high to the low. We'll put in a high from New York PM session on Friday down to this current low. So optimal trade entry, funnily enough, is just into this inefficiency at the top here that was respected just below that sweep of liquidity, so the Asia high as well. So if we do get a sweep of liquidity down here, then a potential pullback that would be into optimal trade entry area as well. So that's something worth noting. So my initial bias coming into this really is I am kind of neutral. We could get a pullback and look for a continuation lower for a sweep of these relative equal lows, or ideally I would like to sweep some liquidity and then go higher. You'll note today that I am starting my session from 2 AM. So I'm deciding I'm going to start back testing from 7 UK time, which is 2 AM New York time. The reason for this is I'm struggling to get to the charts at 1 AM. It's getting a little bit difficult now. So I'm going to be at the charts from 2 AM this morning is when I arrived. So this is when I'm starting to monitor price, 2 AM onwards. So that's just a little update in this session compared to previous videos that you may have seen. So we're going to drop onto the 5-minute and we're going to start looking to see whether we're going to pull back into the range around optimal trade entry or into a premium, looking for a continuation lower. We do have trendline liquidity here, which I am aware of. So this is kind of low hanging fruit targets for us, which would be nice for if we do get a long position. And then obviously we have these relative equal lows that we've highlighted here for a potential sweep of liquidity and then pull back into the range, with the draw on liquidity being this week's new week opening gap, which needs to be filled. So as our London session opens, 2 AM today, strong displacement down. So really aggressive move into into this wick that we identified, sweeping this liquidity. So straight off the bat, there's a really, really strong move. 215 candle. I'm going to drop onto the 1 minute time frame now. We've swept all of the liquidity that I was expecting to be swept, so I'm going to be looking now for our reversal model. So our break of structure is not while this level up here. So this is the high that created this low and swept all of this built up liquidity that we'd engineered earlier. So this is our break of structure level for a 2022 model entry, which means that these last two up closed candles are our breaker block level. So currently, this is an order block. Price may come up, respect this order block, these last two up closed candles, they created a swing high and then displaced away. So we can see we had this fair value gap, this bearish fair value gap here. This is now being filled. So that's one of the first things off my checklist. We've swept liquidity and we are seeing now that bearish fair value gaps that were being respected are now being disrespected. So this could be an inversion fair value gap. So this is a failed PD array. So I like to see failed PD arrays. So that's our first failed PD array. Obviously we have this bearish fair value gap above us as well. So we'll see how price reacts at that. We're going to keep a close note of the time. So we're coming up to 2:30. So ideally after this strong move down, I'd like to see some kind of consolidation down here before a big reversal. But let's just see how price plays out. So this is 2:30. There's no pullback here. We've not had our break of structure yet, so we're still inside this larger dealing range. So we really want to see a break of structure. So there's no entry at 2:30. We've now disrespected that fair value gap. This could now be an inversion fair value gap again. So the bearish fair value gap was disrespected. We are leaving some bullish fair value gaps, not massive candles though, so this is not massive displacement. We have broken structure at this point. 245 is going to be an area that I'm interested in. There was nothing at 2:30 here to really give me confirmation of an entry. So this order block has failed. So this is now a breaker block. So this should hopefully hold price. And it does. So price is just ramping up quickly now. So we're eating into these levels of liquidity that we identified, this trend line liquidity here. Very aggressive move higher. So we've had no real pullback yet. We're keeping an eye on this. We're coming to 2:45. There's no entry at 2:45. Silver bullet hour is 3 AM. What I'm conscious of, I'll move up to the 5-minute time frame. I can see that this now, our breaker block is slightly higher on the 5 minutes, so we've aggressively moved up. These last two up closed candles created a swing high before the new low, so this is our 5-minute breaker block. So the higher time frames do take precedent over the lower time frames. So because we've got a breaker block now on the 5-minute, this supersedes the 1 minute that we were looking at. So I'm interested in how price is going to react if we come back into this level. Price is moving away. We are 250 now, so just prior to the 3 AM candle, the silver bullet hour. Aggressive moves away, so you can see we have got a lot of displacement. This is why I was looking at the 5-minute, because we are displacing higher. The setup has presented itself on the 5-minute. So we created our breaker block. We've got a failed bearish fair value gap. So we've got a failed PD array in the form of a 5-minute inversion fair value gap here. We've got a bullish fair value gap inside this 5-minute breaker. So this is a valid entry on 5 minutes. So when price enters this breaker block, if we do get a pullback, I'm going to be dropping to the 1 minute to look for a refined entry. So we can see we'll pull back. We will jump into the live execution at this point, because you'll see me then preparing the setup as price is pulling back into this breaker block. This is an entry long EURUSD. We swept Asia low, so we built this consolidation, swept the low, pulled back into the range. We're into a 1-minute breaker block here. We're coming into the silver bullet hour. It's 8:08. The 1-minute breaker block, which is the last up closed candles before we created the new low. We pulled through those, leaving this. We've got a fair value gap inside these last up closed candles. A little bit of liquidity put in at the bottom of the macro start here into this fair value gap. So we swept some liquidity into a fair value gap into the breaker. The stop loss is just below the third candle of this fair value gap. We have an order block at this area as well. Which is just being tapped. This is halfway through a 15-minute candle, so that they can draw people the wrong way, putting in a bottom wick on the 15-minute candle and then reverse this to go for the high. The draw on liquidity is the Asia high, so we've swept the Asia low. We're expecting the Asia high to get taken. TP1 is going to be 50% of the trade off at 1-to-1, which is just here. And then TP2 will be taking the high. And then TP3 close out in full. New week opening gap above us and the Asia high liquidity. We're getting a reaction off that order block at the moment. A little bit of drawdown. There was a higher time frame breaker block here on a 5-minute. So these two up closed candles before the swing high to the low. This is a 5-minute breaker block as well. So we've got a 5-minute refined down to a 1-minute for an entry. You can see this is the breaker block with a bullish fair value gap inside. So this is like the unicorn model. And then additional confluences that we've got are this breaker block. Obviously we've got the inversion fair value gap that we've traded through. We've had a bearish fair value gap there. It's now 13 minutes past. We've got a couple of minutes before the new 15-minute candle opens. It'd be good if this could create some kind of displacement. Tap that displacement or the inefficiency at the open of the 15-minute candle. Obviously we've got bearish fair value gaps here, so we want to see some closes through these. You can see that this one bearish fair value gap in between these candles has been the problem. Hopefully we're going to close that now, which will then become an inversion fair value gap. 14 seconds left on that candle. That's an inversion fair value gap there. We're into this fair value gap now, heading towards our TP1. $14 minutes, so we've got another 1 minute before the candle opens. This could be a large fair value gap here, so we could tag this at the open of the new 15-minute candle and then drive for that high. But that's TP1 now, so we're risk-free on the trade. 50% of the trade closed. Leave the stop loss where it is. So the 50% that we've closed in profit cancels the 50% loss if we do get stopped out. TP2. 3R taking out this high, and then TP3 ultimately will be the new week opening gap and the Asia high. So we are at now the new 15-minute candle, so we want to see this fair value gap being respected, really, this bullish fair value gap. I want to see the volume for the new 15-minute candle now quickly come through. Take these. That's good. So we've got 15-minute volume coming in. That fair value gap's respected itself. Hopefully we're going to fill in these inefficiencies now. Take TP2, TP3. We can see that fair value gap has failed. So again, potentially acting as an inversion fair value gap. Could flip to support here. We want to see these continue to fail. We are into this order block now, so it does get a little bit riskier. But if the bias is correct, which based on the 5-minute time frame, we can see we've swept the low, we have the breaker block, we'll come tap to the breaker block on a 5-minute. We would expect this high to get taken, and then we can see that we do have the draw on liquidity, this trend line volume if you like, to run through to take out TP3 into the new week opening gap. Additional confluence that's not on the screen at the moment is that is the optimal trade entry as well. Look, the breaker block is in optimal trade entry. So unicorn entry, breaker block, fair value gap, inversion fair value gap, order block, and optimal trade entry all in one place. Something slightly different is that we did attack this halfway through the candle, so the entry I was basing it on 7 minutes into the hour, into the 15-minute. So the candle opens up, it will drive in the wrong direction and then close in the correct direction. We'll see if we get any follow through here. So that's TP2 hit nicely now. So we're looking for just a continuation now, see if we can get that TP3. And there's our TP3 hit now, so that's fully closed out, just over 5R. There we have it, that was the live execution of this 5R long position. I hope you found the video useful. It's great to see how, if we see price pulling away, not really giving us the entry that we're looking for, going up to the higher time frames such as the 5-minute, looking for our setup to appear, and then again being able to refine down as we approach our target areas is a great method for getting some really nice executions. So I'm really pleased with that trade. I hope you found the video useful. If you did, please leave it a thumbs up. If you do have any questions or comments, then please leave them down below. It's great to get your feedback. And if you're enjoying the content and want to see more videos like this, then please consider subscribing. I'm trying to drop videos like this every single day, and it'd be fantastic to have you on board. Thanks for watching. I'll see you again in the next video.